get in a couple of managements. Technoplast is a stock really that's on our radar. Remember, the stock is up close to around 37% in the past 3 months. I think in the last 1 year, the stock is close to have doubled as well. We have with us Mr. Anil Jain, the MD of the company, who joins us from the sidelines of the Velurum Analyst Conference 2017. Hi, Mr. Jain. Thanks so much, sir, for joining in. First things first, sir, your stock has been a big outperformer. I remember the stock forever at around 40-50 bucks, and suddenly it's taken off. The street is very excited, even at around 120 rupees. The big kicker really is that cylinder business, the composite products business. I believe your total capacity is around 700,000 currently. So if you could tell us, is it functioning at optimum capacity utilization? And at optimum capacity utilization, what kind of revenues can we expect from this business?
Nigel, we have a capacity of 700,000 cylinders, which came in progressively during the year. Okay. So we will actually end up using producing something like 500,000 cylinders in the current financial year, which would be, let's say, about 70 or 75% of the capacity. Right now, we cannot use our entire capacity because we have different sizes of cylinders. So once we change from one size to another, then we lose some capacity in between because of the change over time. But we are now adding our capacity. We are doubling our capacity to 1.4 million cylinders. That will be coming up by middle of May or early June. We have a very strong order booking right now. As to the asset to turnover, I think with an investment of about 75 crores, we can do something like 150 crores turnover on the composite cylinders. But as we increase our capacity, this would actually come down a little bit, yes.
All right, Mr. Jain, if I got that right, so by June this year, your capacity would have doubled from 7 lakh to 14 lakh?
Yes, Nigel. We are looking for a capacity of 1.4 million tons. Okay. As of now, we have a total order book of about 1.8 million cylinders. Wow. And we are expecting some major orders to come in. So to be able to meet up that requirement, we have no choice but to increase our capacity. Yes.
All right. And 14 lakh cylinders, what kind of a revenue does it translate to? I heard that your asset turn is 1:2, so that's great. If you invest 75 crores, you can generate 150 crores. So at 14 lakh cylinders, right, optimum capacity, what will the revenue number look like?
At that time, will be in excess of about 300 crores. The reason being that the bigger size cylinders, though they fall within the same capacity, but the value or the revenue will be much higher. So we are looking at about 300 crores at that time.
Okay. Hi, Mr. Anil Jain. Good morning. Good afternoon, sir. One of the concerns that analysts had was regarding your ROCE trend. Now, if I look at it from FY13 onwards, it has been in low double digits. You had indicated that it could be closer to 22% by 2020, 2021. But could we get a nearer time frame, say FY18 itself? What are you expecting on that front?
Yeah, just to go back a little bit about our ROCE, in fact, we had invested something like 650 crores in our overseas operations as we went into about 9 countries. In the initial stages, they have been burning some cash, so our ROCE came down. But we made a prediction last year that our ROCE from 13%, it will be growing at 2% every year. So this year, we are expecting from 13 to 15% it will go up to, and going up to 2021, it will be about 22%. And we will maintain that. So you can imagine the next year it will be about 17%.
All right. Mr. Jain, as we speak, as we're talking to you, when we started off this interview, your stock was down close to around 1.5%. But clearly the street likes what you're saying. And that's why, in fact, as we speak, the stock is up 2.8%. It's recovered close to 5% from the low point of the day. So let's go on then with this conversation, sir. You're sounding very, very optimistic, in terms of orders, in terms of your cylinder business, in terms of ROCE. You sold close to, I think, a couple of percent earlier this year, and you had indicated maybe it was for some building purpose, etc. You're going to be buying back those shares as well at some point of time. When can you buy back these shares that you've sold out? The stock as well has done a big run, so there's no benefit for you on that front. But when can we see the promoter stake go back to that, the pre-sale levels?
Well, I tell you, we only sold less than 2%, so that's not a very high percentage that we sold out to. But we will be buying it the moment we are able to realize that money. We have no other use for that money because we invest only in time Technoplast and we have nothing else. But it doesn't really matter whether at that time the price is 120, 150 or 200. Whenever we buy, it will only be increasing from that point onward. So we'll be investing, and that 2% we will be able to buy back maybe next year or next to next year. So that is not, but the reason why we are pretty excited about is not just the cylinders. As you know, we have been talking about cross-laminated film project, which has now come on stream. We have added up a capacity of 6,000 tons. The soft launch was done in March, and in April we are starting receiving the orders. The product has been received extremely well in the marketplace, and this is a very high EBITDA margin business. So we are expecting that it will not only improve our EBITDA margins, but actually the ROC, because in this business you can get the advance from the customers at least 2, 3 or 4 months in advance.
Okay.
So therefore your ROC improves there. So we have no doubt about it that our ROC will improve. Yeah.
So, sir, in that case, from these 15% levels, what could your blended margins look like with the addition of all these new products?
I mean, we are projecting that our growth will be 15% and the EBITDA margins will be about 15%. But that is our projected EBITDA margins. Internal targets are much higher than that. So as these products start kicking in, right now, initially, their contribution to the total business is going to be small. Therefore, they would not be able to influence EBITDA in the positive terms very much. But as this business grows and we expect our cylinder capacity to go up, and also the MOX film that we have come out, we expect, we started only with 6,000 tons.
Right.
We probably will be increasing our capacity, and these are high EBITDA margin businesses. So I think 15 is the minimum.
Yeah.
We'll be expecting higher than 15% EBITDA margins going forward.
All right, Mr. Jain, you're sounding very confident today, and as we said earlier, the street really likes it. But final question before we let you go. What's the current debt in your books? I remember you were telling us that you have been reducing your debt, etc. Now you have a lot of capacity, etc. coming on stream. So what's the current debt, and what should the debt look like maybe in the next couple of years?
Well, let me tell you, our debt is about 750 crores right now.
All right.
And actually, the company has an appetite for higher debt if we need for expansion. But we have set out our deadline that at any point in time between now or 2020-21, our debt will not be more than 2.2 times our debt than EBITDA.
Okay.
So we have put a discipline in our system so that will not really run up.
All right, Mr. Jain, we'll leave it at that, sir. Thanks very much for your time and all the very best.